Good morning. You're watching the market right here on ET Now, and the cues from the street remain actually strong. The markets, while they did give up their gains and saw a mild bit of profit taking, about 27 stocks in the NSE 500 index have managed to hit a 52-week high regardless. And guess what? FIIs were buyers in yesterday's trading session as well. Although yesterday we were a lot tempered, we closed in absolutely flat, but the headline number of 18,300 a print on the Nifty futures wouldn't give you reason to complain. So a buy figure from FIIs for a 9th consecutive session. And the Nifty PSB, that's the PSU Banking Index, that's seeing a bit of a decline while autos continue to be in a rip-roaring move. Clearly the FI support continues. Of course, you're not going to move a steady ship on a daily basis. You're not going to gain 100 points, but we're in good stead.
Aisha, just because bulls had a day out does not mean they've gone for a summer vacation. The technicals in the market, the flow picture, the global setup, the bent of the news, all of them are indicating that markets, the natural direction for market is to go higher rather than come lower. Of course, they can consolidate and go higher. Markets will not go up in a straight line. That's how markets never move. Markets could take some time to digest, and I think we will go back on its moment. They will again come back on the track. There is one data, Aisha, which I think markets are always obsessed with. And, we've seen, all three of us have reported, been market commentators, and we've seen that markets are always obsessed with FI number. Always obsessed. Sometimes over-obsessed. Last year, we were all worried that, okay, markets should go down because the FIs were selling, but they did not go down because domestic institutional investors were buying. But yesterday, FIs were big buyers. Domestic institutional investors were big buyers.
And the market was flat.
The market was flat. That means that there was a mild profit booking, I guess, in the market, which was not by very large institutional investors. So the institutional investors are still buying at higher levels. And that entire reversal in trade, I think, is real and it's here to stay. So that gives me confidence that if markets consolidate for a day or so, then this entire attractiveness that FIs are buying, that whole psychology of the market, I think will help the bulls to come back.
Yeah, and that's how we ended up yesterday. Like you said, it was a day off for the bulls, so it was completely flat at around 18,265. But let's move away from the FI flow and keep an eye out on all that's going on Wall Street, because apart from earnings, the street is closely eyeing what's happening when it comes to that CPI print as well. The Consumer Price Index, that's out later today, and it is going to be a fairly important gauge as well on inflation, a little bit more insight as to whether or not the kind of rate hikes that we've seen by the US Federal Reserve are really working to ease the sticky prices. You also had the New York Federal Reserve President, John Williams, and he came out with some statements cautioning that it will take time for the FOMC's actions to restore balance in the economy and return to the target of about 2%. He also said that the problems in the banking industry and their impact will need to factored into the policy outlook. So clearly, Nikunj, it is going to be critical in terms of the CPI print overseas.
Look, that's the most important number from an inflation standpoint. And globally, it's all about interest rates and it's all about regional banks. Looks like the problem in US regional banks, that's getting sorted, that's getting arrested. But CPI, I think, is still a moving number. While the last CPI print was not all that great, this time around, in general, the expectations are that there would be a mild uptick. Now, that's the expectation, April expectation versus March expectation. You match that. The real decline of crude, I think, will kick in coming month, because we've seen a real drop in crude, which was not captured or which may not be captured in the April data. So until and unless the trend line for the US CPI inflation changes, which is that it decisively moves above that comfort zone, I don't think from a market standpoint, this is going to be a very market moving number. If CPI inflation is on expected lines, markets would say we knew this was coming. If markets get convinced, and I think they will only get convinced after the May data, that it is going up again above the uncomfortable zone, then you have to revisit your thesis on where inflation and interest rates are moving. As of now, I think markets are pretty much realigning to the fact that inflation has topped out, interest rates will peak out, and rate hike is out of the window.
Yeah, that seems to be the case. Having said that, we have our very own set of internal cues as well to look out for. Remember, it's the last week of the big Nifty numbers. SBI is still awaited, and today is going to be L&T's turn. You've got Dr. Reddy's, you've got smaller ones like Escorts, you've got Godrej Consumer, Gujarat Gas. All of these are slated to come out with its numbers. And of course, L&T, given the kind of thrust that we have on manufacturing right now, the commentary will be extremely critical.
It's a go-to stock right now, Asha. I mean, markets have not made an all-time high, but L&T made an all-time high, but Nifty was, I think, sub 18,000. So markets, you pretty much know that which way things are moving for L&T. They are in that cycle where everything is really firing full cylinders for them in the old manufacturing space, or in the defense space, or in the entire engineering business. Hydrocarbon business is also making a comeback. So I expect L&T numbers will be strong, and markets expecting that they will remain strong. Margins and commodity pricing somewhere should start also bottoming out for them. The quarter gone by, which is the Q4, is always a great quarter for L&T. So I don't think from a market standpoint, order inflow, margins, commentary would be a concern. However, with L&T, what you need to understand is that how do you want to value the stock now? Because L&T is now becoming more like a sum of part, which is the traditional business and the IT business. The IT business globally is in bit of or IT services business is going through a challenging phase. In 2021, it was reverse. The old economy business was going through a challenging phase. IT was firing full cylinders. So it's great to diversify, but when you look at a stock like L&T, you just cannot look at their construction book and make a view on the stock, because the stock move would be a function of growth in the old economy business or the old business and outlook of the IT business. This is where I think L&T now, it goes another 5-7% higher. Then on basis of sum of part, I think it will suddenly start looking expensive.
Yeah. Okay, that's L&T. In the last 52 weeks, it's seen an uptick of almost over 51%. Although I must add here that we're looking out for order inflows to see a mild bit of downtick of about 5% on a year-on-year basis. Having said that, the total order book is likely to show an uptick of about 11%. The revenue is going to be led by core as well as the non-core businesses. The EBITDA margins, we're expecting a flat performance there on a year-on-year basis, and unfavorable input prices are the ones which are going to keep the margins a little bit at bay. All eyes on this one, but let's also hear out what's the commentary coming in from global experts. Critical data points coming in today, the CPI print, what's going to be the Fed trajectory, all of it. Let me take it across to Anisha for exactly that. Anisha?
Well, yes, ahead of that crucial U.S. inflation data, we have the commentary coming in from a couple of U.S. Fed members. In fact, for Williams, he talks about how inflation is still at high levels. They're going to decide about the rate decision on a meeting-to-meeting basis, so not giving any indication whether the pause is going to sustain or not, saying that the U.S. Fed can bring down the inflation back to the 2% mark, but for now, the U.S. economy is showing underlying strength as well. Going forward, they're talking about more credit tightening and further contraction as far as the credit is concerned in the U.S. economy, and that might impact the economic growth going forward. Shifting focus to what the other Fed member Jefferson had to say, well, on the banking system, he said that it continues to be very sound and resilient. The U.S. economy has started to slow down in an orderly fashion, and inflation too has started to come down. He talks about how this is very typical of a normal economic cycle that we have seen earlier as well. And data as per them also shows that the banks have started increasing their criteria for lending, and that also augurs well for the strength of the economy. Lastly, just highlighting what Cathy Wood had to say, well, she talks about how artificial intelligence is unlikely to fix the banking crisis, but the crisis which is not over is another sign that Fed has perhaps gone too far. She has been very vocal about how Fed has been hiking rates and how the industry has been asking for a rate cut or a rate pause at least. She says that many investors ask us why we are optimistic. In our view, the equity and fixed income markets are discounting lower interest rates, and that's a positive for innovation. All right, thanks very much, Anisha, for summing up all of that global commentary coming in. Let's get a move on then and connect with our chartists, find out their views on the markets ahead as well as their fresh trading recommendations this morning. We've got Naresh Mirani with us at the moment. And Naresh, yes, indeed, we did take a bit of a breather for the markets yesterday. Kunal Bothra also joining in. But the fact remains that the underlying momentum continues to remain strong. What's your view on the print on the index today? And share with us some of your trading bets.
So overall, the trend continues to remain positive. A little bit of a pause for a day or two should continue. And we are slowly and steadily getting into the trend where we can go towards that 18,600, 18,800 mark. Till the time we don't break 17,800 to 18,000 band on the lower end, we would expect that uptick to continue towards that. On the bank nifty, we have a case wherein we need to take some bit of a pause at 43,500 to 44,000 because that is where the previous high was. It's difficult to take a high after a move from the bottom in such a big way. So I would expect a little bit more of a pause, but the trend remains positive. The broader markets also have moved up a bit over the last month and a half. So in this case, one needs to continue to be structurally positive. Keep looking out for stock-specific opportunities. The index could take a pause. At least the bank nifty could. The nifty could continue.
Let's find out what Kunal's outlook is as well on the markets. And Kunal, give us a sense as to what exactly you're charting out for today's trading session, given that yesterday the 18,300 print eluded us.
Good morning, Avan. So 2 days back when we had that sharp selling, so previous Friday, the highs which were created for both the indices, Nifty, made a high I think around 18,300 approximately, and the Bank Nifty specifically made a high which was around 43,600. Now, in 2 days of recovery post that selling, we've yet been unable to break past about the levels of 43,600 on the Bank Nifty, which means that bulls would probably get into more of a high performance zone where there could be more confirmation spending for a breakout. So my sense is that over the next couple of days we could actually see Bank Nifty underperforming slightly. Nifty has managed to cross those previous levels of 18,250 approximately. So Bank Nifty is yet to give that confirmation, and that's why I believe that the lag action could probably come back into the Bank Nifty. So I think it makes a lot of sense to now shift the action towards the Nifty stocks as well as moving out from Bank Nifty and then trying to book profits on most of the banking names, especially the ones which have been underperformers and the ones which have performed of late. So I believe that the action shifts towards the non-banking stocks specifically. Only few selective private sector banking names is where I believe one should focus on rather than focusing on the gamut of the entire PSU as well as the private sector banks.
Well, what in a sense Nuresh reversed yesterday was some of the high-flying PSU stocks, PSU banks, and then if that was, and along with that even railway stocks. Now these are two bright pockets of momentum as well as HNI and retail participation. And I just wonder that why did they reverse so suddenly? FIs were not selling, DIs were not selling. So why these momentum dominated pockets or groups have reversed?
Say something like a smaller railway stock, it had gone up one way. So we cannot expect a one-way move from 60, 80 to 140 levels. 20% correction also would be normal in such a case. Same is the case with PSU banks, which are generally high volatility based stocks. Out here, we've not seen the next leg of a big move as well, but we are consolidating on the PSU banks. So what we've seen is wherever there was over momentum, a very quick move, we are seeing a pause. So that is what is the case right now. We need to start looking out for new leadership. A lot of stocks which had moved up quickly over the last 2 weeks could take a pause. So that is where PSU pack comes in the top place, and especially the railway names. So I would be a little careful on them, would wait for some more correction before actually starting to look at them.
Railway stocks, guys, and we've been just bringing this point out for our viewers that this Indian railway sector is going through what could be called as a boom like never before. Very simple to understand. If you look at government, the government has already spent a lot in roads. They've rebooted the entire power sector. There are a lot of, but railways is one sector where the government capex actually has started. A, there is modernization of Indian railways. B, railway as a sector, I guess, can digest that kind of an capex and which will have a straight line multiplier effect. So the big picture for railways is pretty much like defense, where India wants to upgrade their defense and they are reducing the import on defense. I think the similar factor is at play in India, where we are talking about Vande Bharat and wagons being made in India. We are talking about modernization of railways and security systems being made in India. So it is pretty much in line with Atmanirbharta. The problem is that markets have started factoring in this entire boom's earnings cycle really way ahead of the actual occurrence. Railway business is a high capex and a long cycle capex, which is that the order comes right now, execution will take some time. And markets have bidded the stocks higher, assuming that FY24 will be a bumper year, FY25 will be a super bumper year, but that's not going to happen. FY24, FY25, FY26 are going to be years where you will see incremental growth. You will not see substantial growth because the business will take time before the earnings they actually are projected. So there is a bit of a fraud there. These are stocks which are not dominated by institutional investors. Delivery volume has been low. You're going to buy these stocks on a bad day, on a bad patch of decline. I think there is just too much of fraud which has got accumulated in railway stocks. And very simple to understand. I like the big picture. I like the story, but it's going to take some time, right, before earnings cycle actually starts.
Yeah, it's a long gestation period. While the market has already factored in the order backlog, the new orders is something that will be a bit of a wait. So yes, most of the railway stocks did see a decline in yesterday's trading session. But you know what? Let's get you stocks where you can make money. Let's take it across back to Kunal and Naresh and get in some trading ideas as well. Stock specific at that. Kunal, what's on your list?
So I'll go with two buy calls. The first one is AU Small Finance. That's a stock which has been doing exceptionally well from 640-45 mark. The stock has come back towards 690 plus levels. Looks very attractive. The momentum is also extremely strong. The stock closed at the high point of the day, even on a volatile and choppy session like yesterday. Suggesting a buy with 725 as a target. Stop loss at 683. And the second would be buy on DV Slab, going with the theme that most of the pharma stocks are getting into strong recovery. DV Slab yesterday managed to close above the 200 DMA after months of trading below this long-term averages. So this could be a sign of a very strong reversal for DV Slab. Buy with a target of 35.50, stop loss at 32.70.
Naresh, what's on your stock-specific list?
So first would be a buy on Coal India. The stock is knocking at that 238 to 240 resistance. That's the all-time high on a dividend-adjusted basis. The stock has been in a sideways range for the last few months. A breakout about 240 could give a quick move. So preempting that move, making it a good risk reward trade at current levels. A stop loss at 230 and a target price of 255 in the short term. Second is a buy on Axis Bank, which is setting up for a move, could be similar to the leadership which ICICI Bank took in the previous cycle. The stock, after 4 years of consolidation, had broken out last year above the 820 mark, retested 820 in the last month correction. And from there, we are starting to see a consolidation and a range-bound move being made. And now is setting up for a breakout above the 900 mark. Once this happens, we expect a move towards a new all-time high, as well as starting a structural outperforming move in the whole banking space. So expecting Axis Bank to be an outperformer in the banking space, keeping a stop loss at 870 and initial target price of 970.
Right, okay. And back home, it's D-Day for Karnataka as well. Voters are going to be sealing the fate of 224 seats today. People have started queuing up already since 7 in the morning as voting is underway in nearly 60,000 polling booths across the state. Now, it's a high-stake battle for Karnataka, with the BJP hoping to retain control over the only southern state they have in their kitty and buck the trend of the 38-year-old trend where the incumbent party has always been voted out. For Congress, of course, dethroning its arch rival would be a first step towards improving their performance ahead of the crucial 2024 general elections. Meanwhile, the JDS party of HD Devegowda is fighting to hold on to its turf. Counting is on Saturday, May 13, that is, and the verdict will be setting the tone for the upcoming Lok Sabha, mother of all battles. Here are some reactions of political leaders after casting their vote.
ಮತದಾನ ಅನ್ನೋದು ಬಹಳ ಶ್ರೇಷ್ಠವಾದ ದಾನ. ಒಂದು ಪ್ರಜಾಪ್ರಭುತ್ವದಲ್ಲಿ ನಿಮಗೆ ಏನಾದರೂ ಬದಲಾವಣೆ ತರಬೇಕಾಗಿದ್ರೆ ಅಥವಾ ನಿಮಗೆ ಏನಾದರೂ ಒಂದು ನಿಮ್ಮ ಮನಸ್ಸಿನಲ್ಲಿ ಏನಾದರೂ ಯೋಜನೆಗಳಿದ್ರೆ ಅದಕ್ಕೆ ತಕ್ಕಂತ ನಾಯಕರನ್ನ ಆರಿಸಬೇಕು ಅಂದ್ರೆ ಮತದಾನ ಮಾಡಬೇಕು. ನೀವು ಯಾರಿಗೆ ಮತದಾನ ಮಾಡ್ತೀರಿ ಅದನ್ನ ಕೇಳೋದಿಲ್ಲ, ಯಾಕೆ ಮಾಡ್ತೀರಿ ಅನ್ನೋದು ಕೇಳೋದಿಲ್ಲ. ಯಾಕಂದ್ರೆ ಪ್ರತಿಯೊಬ್ಬರಿಗೂ
Okay, well, we just consolidated yesterday. The FIIs continue to buy India for a 9th consecutive session. And this morning, the SGX Nifty, ahead of that very critical US inflation data, is at best indicating a very, very tempered start. So let's see how the rest of the day pans out. But this company is the one with India's largest solar PV module manufacturing capacity, and it's got plans to expand further as demand for alternate sources of energy continues to surge. We caught up with Warrior Energy's CMD Hitesh Chimanlal Doshi and at their plant and got an insight into how these modules are actually made.
You don't have debt on your balance sheet.
Not yet.
Why is that? And why are you planning to go public if you don't need cash? If you don't have that, that means you don't need cash.
So
You're going public.
Yeah, our expansion plans, if you look, now we are planning to invest around 8,000 crore additionally.
Okay.
This complex which you have visited today, this one complex, we have the 4 facilities nearby. We are investing here 3,500 crores. The new complex which we are building up, there we are investing 8,000 crore. And definitely at that level, we need equity and debt.
Okay.
So that to meet that equity requirement, we are going for the pre-IPO round as well as the IPO also.
You've done one pre-IPO round already.
Absolutely.
Okay. So when are you planning to take it public?
Public, most probably by end of this year, we should be in a public. Or maybe by January, let us.
What I also want to understand from you that this industry right now does need a lot of, it needs a stable policy framework.
Right.
US government right now is perhaps giving a lot of initiative for incentive for non-China solar panel manufacturers, whereas you're benefiting because of that. But there is an election cycle next.
Right.
Would that be the biggest risk?
No, fortunately, particularly in the United States market, they look far ahead. So a lot of new orders which we are getting there for 2025, 2026. That's the one thing. The second thing, we have seen the change of the government when we have been in US market for 10 years. None of the government has gone against the solar. So that is very clear thing. If the regime change, solar is going to continue. The way the energy prices are going up across the globe, today the solar is the cheapest and nobody can afford to neglect the solar. So I personally don't see that there will be any change in the coming days.
All right, let's get a move on then. Lots of stocks that will be in the news today. Lupin came out with a good set of numbers for the quarter gone by. It pretty much beat street estimates. It saw strong growth in the US margins as well. Let's get in the highlights for Q4, and we've got Sharad here to break it down for us. Sharad?
Well, yes, a strong set of numbers coming in from Lupin, and you can take all the parameters, PAT, EBITDA, revenue, all had actually beat the analyst estimates. Now, of course, the stock itself is also near the 52-week high levels as well. And do remember that the important key levers for the growth, especially in the fourth quarter, has been because of the improvement in the Indian business, which actually grew almost 15%. And also do remember that there has been an improvement in the margins, and this is coming for the third straight quarter. There has been an improvement in the margins based on optimization of expenses as well as on the R&D side. Apart from this, the growth in areas have been coming in the API business as well as the EEMEA business, which is the European, Middle East and the African business, and also the Asia Pacific region. Apart from this, the management has been kind of optimist, especially for FY24 on two important reasons. That is the sales force expansion, which is expected to kick in, and material product launches. The overall very good set of numbers coming in from Lupin. And if you look at the brokerages, Macquarie has actually maintained an outperform rating with a target price of almost 790 rupees per share.
All right, thanks very much, Sharad, for giving us those details. So a thumbs up coming in from brokerages too. Meantime, the other set of numbers that we watched out for was Westlife Food World. It came out with its quarterly performance. The top line growth has seen an uptick on a year-on-year basis, but margins have been largely flat. Let's take it across to my colleague Vinny. She joins in with what exactly the management had to say about the results and what the guidance is going forward. Vinny?
So absolutely, in the key features and con-call highlights that have come in from the management, obviously what they're highlighting is that while that growth that we are seeing, that was mainly achieved through menu cards, new menus and innovation in the menus, meals and branding that they've been focusing on, and improvement in productivity and utility led to that, stable margin of around 16% is what we are coming in. But going forward in terms of the EBITDA margin, the company is expecting to deliver a good and consistent operating EBITDA margin is what they're expecting. Gross margins, they said, could vary in that range of 100 basis point up down from the current levels is what they are looking to maintain. The company will be focusing more on increasing the average unit volume going forward, and what they're saying in terms of the stores, the company had given a guidance of 40 to 45 stores for FY24 opening every year as well, and that is what they're maintaining for FY24. But the second half of FY24 could see more store openings than the first half of FY24. Also, they're maintaining a guidance of high single digit SSSG growth for FY24 in terms of going forward as well. Another key highlight that they're coming in is that the smaller city restaurants are growing extremely well. So these are the key highlights that you could say is coming in from the Westlife Food World con call. So keep an eye out on that one today.
And Vinny, stay on with us because Hudson Agro as well is in the spotlight. It was a pretty weak set of numbers. It seemed like the higher procurement costs clearly weighed heavily on profitability, and they announced a 10% revenue growth despite the fact that they've ramped up their manufacturing facilities and there's been retail expansion. What did the quarter look like?
So absolutely, in terms of numbers, what you're seeing, and like you rightly mentioned, that Hudson Agro only 10% growth is what you're seeing in terms of the revenue, and they focus on a lot of new retail markets as well as in terms of ramping up the manufacturing facility. But despite that, only a 10% growth is what we saw coming in. Look at the operating performance. Clear weakness is what we're seeing in terms of the margins of the company, profitability of the company, milk prices. Let's not forget that's seen a sharp inflation coming in. So the procurement cost, the cost for acquiring that milk is become higher. They're spending more on it, and that is why the impact is coming in on the margins of the company as well, whether you look at the gross margins or the EBITDA margins of the company. Other than that, the demand is also impacted by the unseasonal rain, which impacted the value-added products demand during the peak season of the summer as well. And packaging cost, freight cost, that has also seen an increase coming in. So obviously, because of all these factors, we're seeing an impact on the operating performance of the company as well as on the top-line growth of the company as well.
All right, thanks very much, Vinny, for giving us all those details on earnings. Let's move right on then. And sources, according to ET Now, say that Go First rivals, that's the Tata Group as well as Indigo, are holding separate negotiations for the assets of Go First, including the aircrafts as well as the landing and parking spots. Let's take it across then to my colleague Sumit Chaturvedi, who joins in with the latest details. And Sumit, it looks like Air India as well as Indigo are swooping right in.
Go First loss can be gained to many other Indian carriers, including the largest player in the market, Indigo, and other airline Tata Group's owned Air India and Vistara. We hear from our sources that both airlines, Indigo and Tata Group, owned Air India and Vistara, are in talks with Go First lessors. They want to take possession of aircraft, Airbus aircraft, now which are going to be redundant, or we can say that unserviceable very soon, because Go First is in insolvency currently. Go First is currently having 36 aircraft under lease. So these airlines, Indigo and Tata Group own Vistara and Air India, they want these aircraft to be taken by them. Second race is for the slots that are owned by Go First. Well, one of the biggest races in the aviation sector is for the slots, and we understand from the sources Akasa Air is in talks for these slots, and they are going to take these talks further to get these slots. So it reminds us of the Kingfisher saga when Kingfisher was going down. Clearly the other airlines were taking advantage that time. Kingfisher was going down. They were in talks with lessors of Kingfisher Airlines to take aircraft. This time it is Indigo and Tata Group owned Air India and Vistara that are interested in taking the aircraft of Go First airline. So this happens in aviation sector, that you get to first you get the pool talent of the pilots and crew members and then aircraft, but it's going to make things complicated for Go First because it's in restructuring currently, and if its assets are taken over by others, well, it's coming back to skies is almost impossible.
Today, it gives me great pleasure to talk about the Wari Group, a group which is championing the entire energy transition in the world.
India has been a forefront in manufacturing for many years. Now with the government policies and the demand across the globe for the alternative supply chains, I think this is a very good opportunity that we as a whole country, we can become another manufacturing hub for the world. And Wari was always in a forefront for last 30 years in a manufacturing. Of course, solar we started a little bit late, but whatever we were in manufacturing, we took the leadership at the global level.
Okay, and on to some top fundamental ideas then. Devin Choksi chatted with us and he told us he's bullish on Sterlite Technologies as well as HFCL. Hear out why he likes these two stocks.
The results, I think, which came up for HFCL, Himachal Futuristic, I think they remain a little bit, I think, a promising bet at this point of time. And so is the possibility along with in Sterlite Technology. These are the companies which are thriving largely on the network implementation under 5G. And I think they have suffered in past for a variety of reasons. But I guess I think the right reasons are now working for them. In case of HFCL, I think they are also getting into some of the defense items, I think, which are also basically, I think, going to be producing higher amount of revenue for the company going forward. So in my viewpoint, I think this needs probably demands a refresh attention onto them. They look relatively more promising, and given the kind of recovered results that we see, I think that should probably work for this company and the investors here after it looks like.
Okay, let's welcome on board then Hemang Jani and figure out what he's making of the market temperament right now. Hemang, hi, good morning. Great to have you on the show. Hemang, just wanted to understand what explains the fall that we had in the railway stocks yesterday, given that most of these stocks are sitting at a 52-week high, extremely robust commentary, order inflows. Is it just routine profit booking, you think?
Good morning, Aisha. Thanks for having me. I think when we look at the market, I think broadly there is a lot of resilience strength, which is also backed by some amount of FII flows, but you would see certain amount of rotation within the broader market. And when we are looking at the mid cap and the small cap categories, whenever somebody decides to rotate, from X to Y, there is going to be a certain amount of impact, and it's going to be crucial for the investors or the fund managers to do that rotation. So the correction that we saw in the railway stocks or certain pockets is essentially driven by that. I think the fact remains that given the way the government has gone about giving orders on the railway related items to various companies, I think that process is likely to continue over the next 2-3 years given the size of that. So I do not see much of a impact in terms of the fundamentals or the growth, but it's more of a short-term tactical profit booking that some investors may have chosen to do.
Right. And if these stocks were to fall further, Hemang, would you recommend buying the decline then?
Yes, I think railway stroke defense, some of the good PSU names surely present a great opportunity. and railway in particular, because of the this entire Vande Bharat and the expansion of the fleet, upgradation of the infra. I think that itself is a very big opportunity. So I think BEML and some of the railway stocks surely present good investment opportunities for at least 2 to 3 years.
As well, while of course today we are waiting out for DRL as well as L&T, amongst many other earnings which are slated, Escorts, etc. But earnings reactions coming in for Lupin. The Q4 results have been above estimates. The US business margin has actually improved for a third straight quarter. Pharma clearly seems to be getting their mojo back. Apollo Tyres as well. The margin expansion has been a good 480 basis points, and the EBITDA as well has seen an uptick of nearly 59.5%. So this is going to be another stock to look out for. And then, of course, there's SRF, there's SCI, which is going to see an earnings reaction, Nazara Tech, which is going to see an earnings reaction. Even Eveready actually has posted decent numbers. The losses have contracted now to 14 odd crore rupees. That said, Hemang, just wanted to understand what you're making of the oil sensitives, because clearly the crude dip is now playing out. You've seen the margin performance come in for most of these tire names. Is this the space that you recommend being invested in?
Yeah, surely. I think the crude correction in the last, let's say, a week or so has definitely played an important role, and one has to reckon that despite the aggressive production cut that some of the OPEC members decided, the crude has really failed to go up and in fact has started correcting, which is definitely a good sign from India perspective. Having said that, what we must understand is that crude oil and many such raw material or the variables are very dynamic in nature, and large part of the benefit in terms of the raw material prices or margin improvement would have already got reflected this quarter. So to stretch this further would be a bit of a risk at this stage. For example, Apollo Tyres reported good performance with a slightly better margins, but the incremental growth will only come from the volume story and not necessarily from the raw material price correction or the margin improvement. So we have to play this a little carefully from here on. But I think for some pockets like maybe oil marketing companies, paint companies, some of the cement companies, I do think that this crude oil price plays an important part.
Okay, let's move right on then. And stocks on the editor's radar. So today we've picked out two sectors. We'll start off with the paint stocks and then we'll move on to some of those PSU banks. Let's begin by talking about paint stocks because Morgan Stanley, Nikunj, has alluded to the fact that there is going to be a rise in threat from competition and there's going to be a threat to their valuations as well down the line.
See, what was the Indian paint sector? The Indian paint sector had 4 large players, one sumo player and 3 other small players. The sumo name was Asian Paints. And then they had more than 65% market share. The other players had less than 5%, 7% market share each. And that really has been the trend for about 10, 12 years. The sector was growing at 12, 13%, 15% in a good year. These businesses were growing without raising a lot of capital. And when you have growth and when you have market dominance, you obviously enjoy a premium P multiple. That is the story for Asian Paints. Guess what? That dominance of the sumo is now getting challenged by another sumo group called Aditya Birla. If that was not enough, Pidilite, who was in the same business in home construction, has the same network, is now entering into the paint business, which means that there is a large corporate group who's going to be challenging the incumbent, and there is a home improvement company, Pidilite, who understands the supply chain, has great relationships with the dealers and with the painters. Now is going to be coming up with a paint as a category. So this category will see dramatic and disruptive changes, which means the haloed P multiples, what an Asian Paints or a Kansai Nerolac or a Berger has enjoyed, that will challenge. The sector will grow, but not everybody will grow. There could be a price war here, and there could be a challenge to the P multiple. P multiples are always supreme, Avan, when markets are convinced that growth is going to be internal and that brand will never, will never lose its mojo. That is changing. That will change. And a year from now, 50 times no, 31 times no, 51 times no ways.
Yeah. Okay, so Pidilite, Grasim, they're really going to change the game with the competitive intensity, especially when it comes to valuations. I'm sure everyone was curious as to what happened to those PSU banks yesterday because they were the top sectoral losers in trade. Put your finger on any of those names and they did come under pressure. Now, a lot of these companies like Canara, BOI have indicated high ECL provisions, and this is going to be a bit of a threat as well down the line.
What is ECL? Expected credit loss. Expected credit loss is something which banks, they normally bake in when they're talking about a forward-looking number. Markets from the PSU banks were anticipating and they were assuming that the expected credit loss would be in the range of about 1% to 1.5%. Canara Bank has come and poured cold water on that assumption. They're talking about 5%. Yeah. Now, Canara Bank is a big bank. They've got a good book and a sizable book. When they're talking about 5%, it just makes you wonder that our brokerage is very conservative in terms of the assumption for the ECL losses for PSU banks. And PSU banks have enjoyed such a nice rhythm. Last 2 years, nothing has gone wrong for them. Everything has gone right for them. Yeah. And this is really the moment of reckoning where the assumptions on the credit side are not getting challenged. I think it will not impact private banks per se, like an ICICI bank or an HDFC bank. We know their disclosures and their forward-looking comments are very strong. But because of the assumptions what brokerages had in the SMA book, SMA half book, that's a technical term here, these banks will have to, the earning assumptions have to be revisited. And that, I think, in a sense, is really set the cat amongst the pigeon, if I may say so. The downside will not be large because they're still very cheap and credit growth is strong. But yes, in the near term, the momentum has got pricked. That's my limited point.
Yeah, and we saw that reaction clearly play out in yesterday's trade. So there you have it, Aisha. Stocks on the editor's radar.
Oh yeah, absolutely, and a whole host of them. Hemang, wanted your opinion as well, just taking a leaf out of what Nikunj said about PSU banks, as to whether or not you think that they're going to outperform just as they did last year too.
So Aisha, two things I want to share here. One is that the performances this quarter have been very good, both PSU and private banks. There is a sense that the NIMs could go through a little bit of pressure over the next 2-3 quarters, depending upon how the interest rates go. And some people also have a concern or doubt that this was the peak in terms of the earnings growth, and the sector is over-owned. So I think when you have these kind of concerns, there might be a period where the banking would go through some sort of underperformance or a correction, which is very much possible. But I think, given that the sector had already corrected a couple of months back, the valuations are not out of whack, or the consensus growth that the market is expecting is also not too aggressive. So any correction or a consolidation would provide a great opportunity, be it some of the PSU banks like SBI, Bob, Canara, or something like ICICI Bank, Axis Bank. So I think there is going to be enough and more interest around it.
Discussed this one before, but I want to revisit the ONDC impact on Zomato, on Swiggy. Hemang.
By the way, it seems that that website is down because there was suddenly so much traffic. There's a technical snag.
That's typical startup issue, so to speak. In fact, I was reading an Economic Times report this morning. They are talking about high volume, but everything was in a sense centered around the local kirana wala or the food delivery. So, that's how experimentation phase will start. One basic thing, Aisha, is that the objective of ONDC is to increase the reach of e-commerce, and it is a non-profit platform. So in terms of advertising, in terms of making it stronger, in terms of commission structure, a lot will change now. I mean, this is at a very evolutionary stage, so to speak. Hemang Jani, did you order that burger on the ONDC network? Everybody in your office, I know they've been ordering burger and pizza, some ordering both.
Yeah, I think...
when did you order, Monday or yesterday?
Nikunj, I prefer burger. Okay.
Arey bhai, theek hai, it's okay. Your wife is not watching. I know. I mean, a lot of my friends in Motilal Oswal have ordered burgers. I was speaking to them.
Yeah, sure.
It's okay if you admit it. It's okay. No, Kunal though has gone home because when he ordered at office, it didn't come. So, ghar pe khayega, jo ja karke.
Sure, Nikunj. So I think this ONDC has become a buzzing word in the past few days, and my take on it is that surely it will have some risk for the incumbents like Zomato and Swiggy, because the entire ecosystem under which ONDC is operating is free ecosystem where you give better pricing to consumer, you give opportunity to the smaller players, and most importantly, the advantage that some of these companies have, Zomato, Swiggy, on the client data. That data advantage goes away once ONDC comes into play. But what is very critical, Nikunj, to understand is that at this stage, uh, does it have the enough scale to really create a big disruption? We don't think so, unless there is enough traction in terms of client base. They expand categories, grocery, and many more. We don't think that this particular issue is going to be too big in terms of the impact. But since the market is far more sensitive, it has already started pricing this in. And as we see incremental data over the next, let's say, 1 or 2 quarters, that will clearly suggest what kind of impact it would have. We have an extremely positive view on Zomato. We just did initiating coverage report, and we think that that market size is big. And once the company achieves a certain operating profit level, the overall growth can be extremely high. So we are not disturbed by this ONDC phenomena as yet.
Okay. Zomato, in fact, has seen almost a 12.5% move in the last 52 weeks. From those 40-odd levels, it's made it back to almost 61 there. But how can we not talk about Mankind Pharma? What a dhamakedar listing this one turned out to be. An issue price of 1,080, and straight away it shot up 1,300 on opening. And from there, it only climbed up higher, almost 32-odd%. 1,422 is where it shut shop yesterday. But Hemang, unfortunately, not everyone got the allocation. What do they do now?
Aisha, the fact of the matter is that retail category was undersubscribed. So whoever applied in retail, they got surely what they wanted. But yes, I think, the way the listing happened and post-listing, the way the stock ran up definitely was a bit of a technical factor also, because typically what you see is that the guys who've got the holding or the allotment in the retail category, they tend to exit because the stock has got a good listing. And the anchor investors, by the way, who got much less than what they wanted, because the overall holding would be very small, they want to really, get more once it lists. And when you see the momentum, they want to really chase it up. And the floating stock for this is extremely low because, promoter holding is very high, almost at about 75-odd%. So my feel is that since you are seeing this kind of an excitement around an IPO after a long time, people would surely want to have a pie of it. And any correction that you may see, I honestly don't know how much will it correct and when, but surely it presents a great opportunity for investors.
Yeah, I stand corrected. Retail was indeed undersubscribed. But then, Hemang, do they buy it at these 1,400 odd levels?
I think, Aisha, for those who are playing a momentum game, surely, it makes sense to participate, because when the stock reaches a certain high level, low floating stock, that's a classic case for momentum players. Surely they should participate. If one is really looking to, buy for investment, I think it would be prudent to wait for, some dip. I don't know how much would it be there, 5%, 7%. But this looks like a very clean, unique domestic pharma opportunity. Valuations are slightly on a higher side now that it has already gone up by about 25% odd. But surely it deserves a pie in the portfolio of some of the large investors.
Nuresh, once upon a time we did discuss Century Textiles, and I'm looking at the data here. It yesterday closed above the 200 DMA. It was a breakout stock. Is Century Textile looking strong? Is it looking good for more, Nuresh?
So technically, over the last 3-4 sessions, the stock has given a breakout, good momentum seen out here. So the move has been surprising. After quite a long time, the stock has been in a downtrend for the last almost 1.5 years. So this is the first indication of a bottom being in place. So it's just that it's moved up 10% over the last 4 sessions. So the risk reward is not great. But any dips back to 720 would actually 720, 730 would be an entry point. Technically, volumes are also good over the last 4 sessions. So generally, a price volume breakout indicates that the bottom is in place and we could be slowly trending up. And we've seen that happen with a lot of these names which have a real estate component to it. So looking at Century Textiles, but missed out on the move, we'll be waiting for dips here.
Hemang, where is Bajaj Finance headed? It cracked because of high valuations, popped right back up post numbers. FIIs are back. Do you think this is one stock which should come back on everyone's radar?
I think Nikunj, NBFC as a theme or sector is back in the reckoning, and now that the RBI has put a pause on the further rate hikes, globally also you're seeing that at some point the rates are going to, at least further, there is not going to be further hike. That bodes extremely well for the NBFCs. But within the NBFC, I think, names like Bajaj Finance or some of the auto financiers, M&M Finance, Chola, I think these are the ones where we are seeing good traction in the business. When you look at the business updates, quarterly numbers, and the outlook, they are sounding far more optimistic. I think the housing finance, NBFCs would go through a little bit of a stress because there's a sense that the rate hikes have been more than 200 basis points, and the margins may not be looking that good. So I think we'll have to be a little more selective about which pocket are we getting into. But surely NBFC as a space will do extremely well.
Morning. Wanted to also understand your take. We were just talking about stocks on the editor's radar and paint stocks. That's an interesting space given that now things are likely to be challenged with the competition intensifying. Do you think that those lofty valuations now are likely to get challenged and that Asian Paints is going to see some serious competitive intensity and of course some of the other players within the space? Hemang, that was for you. Paint stocks?
Yeah, sure, Avan. So my take is that already this is known that you will have a very serious contender who's going to go out aggressively in terms of putting up capacities, pricing, so on and so forth. So there is going to be some moderation in terms of the growth that some of the large players would have. But we have to understand that this market opportunity is too large. So yes, there will be certain amount of correction in terms of the valuations or the overall growth that the market is building in. But I do not think that this is going to be a big issue for players like Asian Paints or some of the Kansai, Nerolac or Berger. But I think the sector will go through a little bit of a PE correction in the near term, maybe 6 to 12 months. And we should avoid aggressively buying into Asian Paints at this point of time.
Kunal, Indiabulls real estate. The back of the stock was broken yesterday.
Yeah, Nikunj, and I think it's been one of the few stocks which I have not traded since quite some long time. Indiabulls real estate, Indiabulls housing finance, these stocks have actually lost their mojo in terms of the credibility of uptrend. They're so much susceptible towards news flow surrounding them that it's very difficult to carry position and hold them for a longer period of time. Same is the case with Indiabulls housing. The stock has been a classic underperformer both phases of the trend, whether in 2020 lows where the markets and the housing finance space recovered, or whether it's the phase of the last 4 or 5 months of the correction which started from December 2022. I think in both of the phases, the stock has been a big underperformer. So I'm not too much of a fan for these two names specifically. So typically tend to avoid trading as well as looking at the charts for both of these names.
Hemang, let's understand the spirit of the NCLT order yesterday. It's a delay. They've asked for more clarification. It's not that embassy is pulled out and the merger is not going through. So it is a matter of maybe months or quarters, I don't know, but the merger will go through. Isn't this a good entry point for somebody who wanted to buy it because soon it will be an embassy group company?
So Nikunj, this company and certain stocks, there is a certain amount of uncertainty, and if you see the track record, you do see certain surprises which raises doubts on the corporate governance and what kind of news flow can come through. So I think for investors who do not like these kind of surprises, I would certainly think that this stock one should avoid. But yes, for a certain category of investors who are high beta and who are looking out for certain opportunities because of this kind of news flow and correction that you see in the stock price, it may present opportunity. But as I said, the entire space, this housing finance, etc. Anyway, because of the way things have panned out, people are not too excited, and then you have this kind of thing. And when you get into some sort of a legal issue, Nikunj, it's very difficult to put a time frame. We cannot say with any degree of conviction that this will get solved in 6 months or 10, 12 months like that. It may just stretch itself out. So I do not think it's a great idea to really buy because of this.
Okay, meantime, wanted to get in a technical take as well on some breakout stocks. And on the charts, Kunal, what does Tata Communications look like? And we also saw Birla Soft. We had the management, a pretty strong set of numbers, and that stock saw a very heady reaction.
Well, Tata Communication is interesting because after yesterday's breakout, and it was a very strong breakout for a stock like Tata Communication, which tends to move just about 5%, 7% on an average for month or 3 months, on an average. That's the kind of a low beta performance the stock tends to exhibit. So yesterday's breakout was quite interesting. It managed to come back towards a 3-month, 4-month high, breaking past above the previous resistance of 1280. Volumes exceptionally strong. And I think, with the kind of candlestick pattern shown yesterday, it indicates that there is a new wave of change for change of trend for Tata Communication in terms of the trends. The cup and handle pattern targets for Tata Communication comes closer to 1380 to 1400 marks. So I'm expecting at least another 80 points to 100 points upside in the next 1 month for Tata Communication. Birla Soft, on the other hand, could be intriguing because after yesterday's price action move, it's actually come back into an overbought territory on the short-term indicators. So it was not as if that the stock suddenly saw momentum on the upside. For the last 1 month, I think from the start of month of April, the stock was at 255, gradually moved towards 285, and then from 285 yesterday, the stock jumped up to 305, 310 marks. So the move was already baked into the prices. I believe now the risk reward is a bit more stretched to initiate a fresh buy for Birla Soft. So I'll wait out for a correction. But for Tata Communication, I think it's a very good buy on dips, expecting at least another 80 to 100 points on the upside.
All right, let's get a closing comment from Himang. Himang, nail it down to your high risk, high return idea.
So Nikunj, in terms of the mid cap names, we have been liking something like PTM and Zomato that we had already discussed. I think these are high risk, high return ideas for sure. I think Mankind is something that would present great opportunity for the momentum players. You might see a little bit of swing or volatility, but surely it looks like clean trending story at this point of time. Apart from that, some of the numbers that were good, I think one can really look at SRF, where the chemical business, performance was extremely good. And as I said, some of the NBFC companies, Mahindra Finance and Chola are the ones that we've been liking at this point.
Well, Himang, thanks a lot for that. Now, Raymond's yesterday came out with numbers during the market hour. The fine print is being digested by the market. Let's connect with the CFO. Some would say that, Amit, in a sense, has been architect of a lot of turnaround in Raymond. And Amit, good morning. Thank you for joining us. So nice to connect with you. I mean, you must be a happy man looking at how the way the stock has just quadrupled in the last couple of years. My first question is the EBITDA margins have improved in this quarter on the back of benefits because of low cotton prices and freight cost. Any other factors which have aided to the recovery, and what is your guidance going forward?
So look, in terms of this quarter, I think we have delivered over 17% EBITDA margin on a consolidated basis. And I think this is also to do with the certain factors that, one, in terms of managing the growth, which we have been able to achieve. Second is also in terms of some of the control of the cost. And the third is there has been a slight improvement in the pricing of our products, which has helped to get this margin. Now, going forward, I don't want to that it would be not appropriate for me to give a specific guidance in terms of what could be the margins. But you have seen our consistent performance that we are slowly and steadily improving the performance operating as well as the financial performance. So we continue to hope to do so going forward as well.
Change in the corporate structure which is underway, what kind of value unlocking is expected for shareholders? What is the new milestone that you would be setting up for the lifestyle and the real estate business? Because you would be doing 100 years in 2025.
So actually, if you see very, very clearly, we have outlined almost 10 days back that we are going to have two separate entities, one focused on lifestyle and one focused on the reality business. And those two entities will have a clear path in terms of growth opportunities. In the lifestyle business, we are very clearly seeing over the next 3 to 5 years in the range of mid-teens growth. And as far as the real estate business, I think you are seeing more in the range of the growth of high 20s growth. And that's the way we want to move forward, because the base at the real estate is smaller, which we think we can expand very, very fast. However, the base at the lifestyle business is already quite large. So that's one on the growth part. Second thing, you see the whole corporatization value unlocking. You see that an investor of what we had today was in the Raymond Limited, you had both the businesses of lifestyle and real estate. Now, both are separate. So you have a very pure play, net debt-free listed entities. So the investor who likes the real estate would invest into the Raymond Limited, which is a real estate prime play company. And where if you have an investor into a branded B2C business, lifestyle business, they can invest into that RCCL, Raymond Consumer, where this business from Raymond Limited will be demerged into the Raymond Consumer. So that's, and both are net debt-free company, huge growth opportunity. Between the two organizations, we will have more than 1,500 crore of cash, which will also enable us to drive growth at an aggressive pace.
Amit, hi, morning. Can you share some timelines with respect to the corporate restructuring? How are things shaping up?
Yeah, sure. So if you see, in terms of the demerger process, it takes anything between 12 to 15 months. And the effective date of demerger is obviously 1st April 2023. So you will see in the next 12 to 14 months, we should be able to complete this demerger process. As far as the separately the transaction on the FMCG, you know that it has been closed. We have received the money yesterday. So to that extent, we have already got the money from Godrej. So that transaction is already closed.
Okay, and the momentum in real estate has continued. And with the new entity, will you be accelerating the momentum even further? What does the launch pipeline look like?
Yeah, no, absolutely. You see, we have very clear, and as I mentioned all along, that our real estate business on a standalone basis is a net cash positive business. In spite of generally the trend is that in the real estate there is a debt. But the way we have worked, because of the sales velocity, our delivery capacity, capability, which is clearly reflected because we have delivered apartments 2 years ahead of RERA. Our first two projects are almost 80% sold out. And even the third project, which we launched in February of this year, within a span of 7 days, we could sell 100 flats. So that clearly reflects upon that there's a lot of appetite for good quality apartments to be sold and in the right level of pricing with the right level of amenities. So you will hear more and more from us about the various launches, because if you have sold 80% of your inventory of the first two projects in Thane, you need to have some more launches in order to see that you should be able to sell, because that's what people would look for. And the projects have still a timeline to go. So I think you will hear from us very soon some of the other launches.
Now with the ABFRL TCNS deal, there could be renewed focus on the ethnic wear space. Now through ethnics, you cater to the really men's ethnic wear segment. What are the growth prospects there?
Yeah, no, absolutely. Ethnics is a very, very important segment for us. As you know, there won't be a wedding in India where the Raymond suit does not get bought, or one way or the other Raymond is not connected. So I think wedding is the one space which is very, very close to Raymond, and ethnics by default becomes a natural choice for the wedding customers. So therefore, we see a great opportunity for us to participate in the market. We have already opened almost 65 plus stores in the country, and we have a massive expansion plan in terms of the EBOs. So over the next 3 years, we expect these stores to reach to a 300 number, and that would help us in terms of getting a decent market share in this growing market.
Despite global headwinds, Raymond has witnessed a healthy growth in garmenting business in FY23. Could you highlight the factors, and how is the overseas book shaping up ahead of the season?
I think the China Plus One has truly helped India as a country and Raymond as a group to go and participate in the global market and gain market share. So very clearly, if you see that in terms of the revenue capability, we have grown more than 50%. And the reason for that is one or two very simple, that we were present in the categories which is catering to little, we are seeing a K-shaped recovery. And in a K-shaped recovery, the suits which are being sold in the global markets are not the tune of $100 or $150, more in the range of $300, $400. And that demand has not fallen. So we see very comfortable demand throughout the last year, as well as on a go forward basis. We are seeing till August, September, we are fully booked, and we are expanding also additional lines. So we are investing behind this garmenting facility in order to grow that business, as we see great potential for us.
All right, Amit, let you go on that note. Thank you so much for giving us your time. All right, let's move on and revisit the rationale of what the outlook is on paint stocks. The brokerage note from Morgan Stanley saying that competitive intensity is going to be a bit of a stumbling block down the line. Here out the editor's take talking about PSU stocks and the outlook for paint stocks. Today, we've picked out two sectors. We'll start off with the paint stocks and then we'll move on to some of those PSU banks. Let's begin by talking about paint stocks because Morgan Stanley, Nikunj, has alluded to the fact that there is going to be a rise in threat from competition and there's going to be a threat to their valuations as well down the line.
See, what was the Indian paint sector? The Indian paint sector had 4 large players.
Yeah.
1 sumo player and 3 other small players. The sumo name was Asian Paints. And then they had more than 65% market share. The other players had less than 5%, 7% market share each. And that really has been the trend for about 10, 12 years. The sector was growing at 12, 13%, 15% in a good year. These businesses were growing without raising a lot of capital. And when you have growth and when you have market dominance, you obviously enjoy a premium P multiple. That is the story for Asian Paints. Guess what? That dominance of the sumo is now getting challenged by another sumo group called Aditya Birla. If that was not enough, Pidilite, who was in the same business in home construction, has the same network, is now entering into the paint business, which means that there is a large corporate group who's going to be challenging the incumbent, and there is a home improvement company, Pidilite, who understands the supply chain, has great relationships with the dealers and with the painters. Now is going to be coming up with a paint as a category. So this category will see dramatic and disruptive changes, which means the haloed P multiples, what an Asian Paints or a Kansai Nerolac or a Berger has enjoyed, that will challenge. The sector will grow, but not everybody will grow. There could be a price war here, and there could be a challenge to the P multiple. P multiples are always supreme, Avan, when markets are convinced that growth is going to be internal and that brand will never, will never lose its mojo. That is changing. That will change. And a year from now, 50 times no, 31 times no, 51 times no ways.
Yeah. Okay, so Pidilite, Grassen, they're really going to change the game with the competitive intensity, especially when it comes to valuations. I'm sure everyone was curious as to what happened to those PSU banks yesterday because they were the top sectoral losers in trade. Put your finger on any of those names and they did come under pressure. Now, a lot of these companies like Canara, BOI have indicated high ECL provisions, and this is going to be a bit of a threat as well down the line.
What is ECL? Expected credit loss. Expected credit loss is something which banks, they normally bake in when they're talking about a forward-looking number. Markets from the PSU banks were anticipating and they were assuming that the expected credit loss would be in the range of about 1% to 1.5%. Canara Bank has come and poured cold water on that assumption. They're talking about 5%. Now, Canara Bank is a big bank. They've got a good book and a sizable book. When they're talking about 5%, it just makes you wonder that our brokerage is very conservative in terms of the assumption for the ECL losses for PSU banks. And PSU banks have enjoyed such a nice rhythm. Last 2 years, nothing has gone wrong for them. Everything has gone right for them. And this is really the moment of reckoning where the assumptions on the credit side are not getting challenged. I think it will not impact private banks per se, like an ICICI bank or an HDFC bank. We know their disclosures and their forward-looking comments are very strong. But because of the assumptions what brokerages had in the SMA book, SMA half book, that's a technical term here, these banks will have to, the earning assumptions have to be revisited. And that, I think, in a sense, is really set the cat amongst the pigeon, if I may say so. The downside will not be large because they're still very cheap and credit growth is strong. But yes, in the near term, the momentum has got pricked. That's my limited point.
All right, let's get a move on then. A quick look at the pre-open rates and currently quoting around the 18,300 mark. What are our Chartist index calls this morning? Let's find out then what they're advising. And yet again, it's a unanimous hold recommendation on the index. Remember, yesterday was a bit of a pause day. We'll have to wait and watch as to whether or not the undertone of the market remains positive, the momentum continues, or yet again, it's a bit of a consolidation on the street, but the consensus call is hold. What about the Nifty Bank Index? Remember, it was a very different picture when it came to some of the PSU banks, and yet again, it's divergent calls. Book profits, no trade on the Nifty Bank, and hold, says Santosh Meena. All right, let's find out those mid-cap strategies as well then from our chartists. What are they picking out for the day, Kunal?
So that'll be a buy on Info Edge. NSE code is Naukri for that. It looks attractive. Inverted head and shoulder pattern breakout. 3840, 3850 is the breakout or the neckline of this pattern. So would suggest a buy on Info Edge. Targets of 4,300. Stop loss at 3840.
Okay, then let's find out what exactly Naresh is picking out for the day, Naresh.
So that would be a buy on Tata Communications. The stock saw a price volume breakout yesterday, expecting a follow-up today, a stop loss at 1270 and a target price of 1400 here.
Okay, a couple of stocks. Let's see what the pre-open reaction has been. What is Lupin up to, considering the Q4 numbers were above the analyst estimates? The US business margins have improved for a third straight quarter. Lupin will just come up for you on your screens. About 0.6% higher is where that stock is. By the way, DRL as well is slated to report its numbers today. L&T2 in the pipeline for its earnings today. Apollo Tyres, that's also come out with a stellar set of numbers. Having said that, the stock has been very, very buoyant of late in any case. Apollo Tyres, though, starts off in the negative, about 3%. That's what the pre-open rate is indicating. But for the market, we seem to be in good standing.
Yeah, I mean, one day off does not mean this that the bulls have gone on a summer holiday. We all take a few days off in middle. So I think for me, that is how I would look at the markets. It was off on Friday, but Monday was good. It was off on Tuesday, but it could be a decent Wednesday. FIIs are buying, and they are buying lock, stock, and barrel. That's the most important number in the near term, which addresses the flow concern. I mean, if they were selling and if markets would have reversed, if you would have reached new resistance level, we would have made a different view. But the fact that DIs are buying and FIs are buying, the institutional guys are saying, hello India, once again, which is very, very important in terms of understanding the short-term trajectory of the market. So it's hello markets this Wednesday morning, and what do we have? We have a near perfect market breadth, near perfect. I would have hoped for something like 1200, but yeah, this is also good. 1:5 advance versus decline. Nifty is recouping some of its losses that registered yesterday. The breadth of the market for the small cap index and the mid cap index is also decent. Let's address some newsmakers here. Not too many newsmakers, but the small numbers which are important. One is Apollo Tyres. Second, to some extent, I think is IndusInd Bank, which has settled now. Third is Lupin, where numbers came after the bell, which are not bad at all. I mean, for the first time after many quarters, so many years, Lupin has got a thumbs up post numbers, but not in terms of stock, in terms of brokerage. The stock ran up from 600 to 740. You got L&T today, and then you got DRL today, and then Zomato, where BofA has come out with a report saying that the ONGC impact is too early to dismiss or assume that the food delivery business is going to completely reverse. But Zomato is bouncing back. So it's a good start, a promising start, if I may say so. Let's see if we can build on it.
SCI as well came out with its numbers. The EBITDA has come in higher by over 42%. Margins also have seen a very big expansion, 5% higher for SCI. That's a very good start there. Nazara Tech, they've managed to achieve their FY23 revenue guidance. Margins have expanded about 500 basis points, but you're not seeing a meaningful reaction come in there. They're also ever ready. The losses have contracted there now to about 14.5 crore rupees. Revenues are higher by about 18%. Ever ready 1.25% higher on that particular stock price. There's also KSB, there's Nuvoco Vistas. These are all earnings reactions and positive ones at that. There's SRF as well, by the way, which has increased their capex for setting up of an arm, SRF Alltech, to about 530 odd crore rupees from the earlier 425 capex that they had outlaid. In the meantime, you've also got some negative earnings reactions. Godrej Agrovet, for instance, the EBITDA is down 56%. Let's see what the stock price reaction here is. 4% lower for this one. Castrol as well. The margins have contracted nearly 300 basis points. Stock down 2% as we speak right now. There's Latent View, there's Hudson Agro, and then of course there's Rain Industries as well, wherein the margins have fallen nearly about 600 basis points on a year-on-year basis. So all these are seeing some negative earnings reactions. But the buoyancy for MGL, IGL, let's see whether that continues today as well. These were very big movers yesterday. They've taken a bit of a pause today, at least MGL, which shot up 7.5% in trade yesterday. Tatacom, Birlasoft, of course, was an earnings reaction yesterday, shot up 7%. Let's see whether there's any follow-through coming in there. Sure enough, mild one at that. So it's a mild start, mild earnings reactions, 18,300 here on the index. Kunal, what's next and what trades are you punching in right now?
I think it's a good start for the index given the market trajectory yesterday. Few of the stocks which have been something which have been trading recently, Glenmark, AU Bank, etc. These stocks have opened up quite well. They are amongst the top F&O gainers as of now. But the stock I would look to trade the open would be DV Slab. I think that's a chart which looks extremely attractive. And by the day, the stock has been crossing over some crucial resistances for itself. So that's a stock which would be keen towards trading the opening as well as recommend to clients.
That's DV's Laboratories. That's the first trade that Kunal is punching in. Naresh, what about you?
So that would be Coal India in touching distance of that 240 mark, expecting it to break out in the next few sessions. So that's the buy I'm doing.